Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 2nd of September. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, the price of gold surpasses $3,500 an ounce to hit a new record high on US rate cut bets.
Nestlé dismisses its CEO, saying he had an undisclosed romantic relationship with a direct subordinate.
Plus, when artificial pressure becomes a real problem, how cheaper lab-made diamonds have helped to plunge Botswana into crisis.
Let's start with a roundup of our top stories.
Gold has hit a record high, driven by expectations for Federal Reserve rate cuts and concerns over the central bank's independence. The price of the precious metal topped $3,500 an ounce as investors loaded up on the safe haven asset. The latest run comes after Fed Chair Jerome Powell cautiously opened the door to a reduction due to a weakening jobs market. Here's the view of BNP Paribas chief economist Luigi Speranza.
We think this downside risk will not materialize, and the Fed will help here with sort of an insurance cut, if you want. That's the way I regard the September cut. The labor market is being weakening, probably more than we had expected on the base of original data, but I think it's still a soft patch here.
Luigi Speranza speaking there as bond investors worry they could be in for a rough September. Over the past decade, debt maturing beyond 10 years has typically lost 2% in the month, and with governments set to boost borrowing, long-dated bonds are already trailing shorter maturities.
Nestlé has dismissed its CEO, Laurent Freixe, after only a year due to an undisclosed workplace affair. The abrupt change removes the boss of the world's largest food company, who was seen as a safe pair of hands. Bloomberg's James Woolcock has more.
Nestlé's board said an investigation found Freixe had an undisclosed romantic relationship with a direct subordinate. The CEO, who worked for the company for 40 years, was only 12 months in his role at the top and will not receive an exit package. He's been contacted for comment by media outlets but hasn't yet responded to the announcement. The food company has named Philip Navratil, who currently runs its Nespresso coffee brand, as his replacement. In London, James Woolcock, Bloomberg Radio.
Revolut has begun a secondary share sale at a $75 billion valuation. Bloomberg understands that staff at the London-based digital bank will be able to sell as much as 20% of their stakes for just over $1,300 a share. The deal will cement Revolut's status as one of the most valuable fintechs, with the latest valuation up from $45 billion last year.
A financial industry lobby group says that the European Union's failure to break down barriers between national banking markets has trapped hundreds of billions of euros of capital at big lenders. Bloomberg's Michal Kubala has more now.
The Association for Financial Markets in Europe says obstacles to cross-border banking services have trapped 225 billion euros in low-risk assets. The lobby group warns EU banks face tougher requirements than peers in the US or the UK, putting them at a competitive disadvantage. European politicians are taking steps to forge what they call a banking union, but progress has been slow. The AFME says a lack of trust between national supervisors is preventing changes to the rules, and points in particular to the cumbersome process in approving cross-border mergers. In Brussels, Michal Kubala, Bloomberg Radio.
Authorities suspect Russian interference was behind a GPS jamming incident that disrupted a plane carrying the President of the European Commission, Ursula von der Leyen. A jet carrying the EU leader had to land in Bulgaria on Sunday using only paper maps after electronic navigation stopped working. Bloomberg's Brussels bureau chief Suzanne Lynch says it's part of a repeated pattern.
A lot of the Baltic countries have reported an increase in this kind of activity, GPS jamming, impacting maritime and air travel across Europe by Russia. So very much an indication of the tensions that are out there at the moment in Europe as this war rages on in Ukraine.
Lynch adds that von der Leyen was touring the EU's easternmost states on a campaign to build up military infrastructure. The Kremlin didn't immediately respond to a request for comment.
Now, here in the UK, Prime Minister Keir Starmer announced a series of personnel changes centred around his economic top team. Former Bank of England Deputy Governor Minouche Shafik has been hired to be his chief economic advisor, and Treasury Minister Darren Jones was moved to run Starmer's office. But former head of the Institute for Fiscal Studies, Paul Johnson, criticised the attempts to hit the reset button after a stuttering first year.
More than a year into this government, they're only just working out that they might need some senior economic expertise within Number 10, both at a political level and at the advisor level. It's yet another example, I think, of how staggeringly unprepared this government was for government, despite the fact that they essentially knew they were going to win the election some considerable time out.
Economist Paul Johnson there speaking to Times Radio. Polls suggest that Labour have seen a significant fall in popularity in their first year in office, driven by issues including the economy and migration. Meanwhile, yesterday, the Home Secretary made a significant announcement on migration policy as Parliament returned. The government will temporarily suspend the scheme that lets asylum seekers bring family members to the UK.
Premier League clubs have spent more than ever before in a single transfer window this summer, surpassing £3 billion. Headlining the total is Alexander Isak's record-breaking move from Newcastle to Liverpool for £125 million, making him the most expensive player in British history. Speaking to Bloomberg last month, Tristram Leach, co-head of European Credit at Apollo Global Management, told Bloomberg the sport presents interesting opportunities.
Certainly it's an area we're involved in, we think is interesting, we think represents compelling risk reward. And look, we look at that as part of our asset-backed business, where, lending against receivables from high quality counterparties is something we're happy to do and we think we can do in a competitive way. And look, the sports world seems to be attracting more and more money all the time.
Apollo's Tristram Leach speaking there. Player fees are often paid in instalments over several years, creating future cash flows that clubs can monetise. These so-called transfer receivables can enable a relatively low-cost source of raising debt. The Premier League's total transfer bill this year was more than was spent by the Bundesliga, La Liga, Ligue 1 and Serie A clubs combined.
And those are our top stories for you this morning. Looking at the markets, the All Country World Index at the moment in the red. The MSCI Asia Pacific Index is also down. Some modest gains elsewhere in Asia, for example, the Kospi. European defence stocks yesterday gained. Stock futures for Europe, though, are in the red. So too are US stocks. We're back, of course, after the Labour Day holiday yesterday. Yields on treasuries, also the cash trade reopening. In terms of 10-year yields, we're up 2 basis points at 4.25. We've also got euro area inflation readings out today, expecting just above 2% perhaps. Bloomberg dollar spot index is up about 0.1%. Those are the markets right now.
In a moment, we'll bring you more on the rally in gold prices, plus how Botswana has been hit by the rise in lab-grown diamonds. But another story that we've been reading this morning on how American schools are using AI as the new term starts. So as Vahini Vara has been writing for Bloomberg Business Week, it is the third school year since ChatGPT first emerged. The initial response from school authorities was to try to ban it, although it does seem like attitudes are changing. She's spoken to a whole range of educational experts, teachers, parents, pupils for this piece as well, all with differing perspectives on the use of AI, the potential applicability of it in the classroom, whether it can be a good thing if controlled properly or whether it's universally a bad thing. There's no there's no conclusion, essentially, as the research that one accelerator at Stanford has been tracking as well, largely inconclusive as the educational effects of it as well. But it is a debate that's being had in schools and I'm sure in households all over the world as well.
Yeah, I think it's interesting the way that you put it, that it's the third year in existence. I mean, when you think about school pupils, every year is so important and kind of cumulative. Look, the UK's having this debate as well, right? The government released new guidance for schools over the summer about this. The guidance, interestingly, though, was aimed at teachers, Stephen. So teachers can use AI to help them with lesson planning, with marking and with administrative tasks, but they need to use their professional judgment, was the view of the UK government. They sort of frame it as an opportunity, but also there's been kind of quite a lot of chatter over the summer about how do teachers make it clear to parents what and how AI is being used, as pretty much everyone knows that pupils and students are doing it.
Yeah, exactly. And I suppose look, the technology is evolving so quickly as well. Yeah. How do you try to make the most of it without necessarily shortcutting past some of the key skills that people need later in life? So I think it's an ongoing debate that we'll be hearing plenty more about. But Vahini Vara's piece, really well worth reading for an insight into how this debate is playing out in the US over the use of AI in schools.
Now let's bring you more on our top market story this morning. So the surge in the price of gold, which has hit another record high. Our economics reporter Katia Dmitrieva joins us for more on this. Good morning, Katia. What is driving this latest rally in gold?
It's a huge rally. I mean, it's really three things if you think about it. The first and foremost, this growing expectation by markets, by economists, that the Fed is going to have to cut interest rates this month. We're now in September, believe it or not. And also because, economic activity is slowing and you have these potential changes at the Fed, and that's sort of the second reason. So there's been a lot of risk, growing volatility because of Trump's attacks on the Fed. Most recently, of course, going after Governor Lisa Cook. She's taken him to court and still in her position and is sort of remaining there. But this creates a lot of volatility. Gold being a safe asset, we've seen buying based on that. And finally, and this is kind of a longer term trend, but this idea of selling the US dollar, selling America, or at least pivoting to other assets, particularly safer assets. And many countries, particularly emerging nations, have been buying gold instead of US dollars. So that's really been keeping demand high.
And of course, this comes after a huge run for gold so far this year, up over 30%. Questions over tariffs and what effect that was going to have as well. How much further could this go?
Well, we're now talking about $4,000 an ounce. So we're at about $3,500 right now. And, we're seeing some analyst notes that are saying, well, $4,000 isn't actually out of the ordinary, and even through year end. And that's kind of because of the recent run up, because of the year to date run up, and because a lot of these geoeconomic tensions and volatility are not going away. I mean, even just this week, we saw this meeting between Putin and Xi and Modi, and it really underscores just how much the global South is going to continue to, diversify away from the U.S., really come together, boosting trade agreements with one another, potentially purchasing more gold, which is going to increase that pressure on prices. So it doesn't look like it's going away anytime soon.
Meanwhile, of course, Friday's jobs report is the next key data point to watch in terms of those rate cut expectations. And we also have some other data points to look forward to before then. So what could be the next catalyst for markets?
Well, it's really going to be the Friday jobs numbers. I mean, economists are expecting right now about 75,000 gain in August, which is about the same as the prior month. So anything too far above that would, raise some questions potentially about cutting rates. But anything below that would pretty much solidify rate cuts in markets' minds, in investors' minds. But before then, we also have some hints of that. Of course, we have the ADP private payrolls numbers. We have weekly jobless claims. Those are expected to come in about the same as the prior week. Factory orders, which kind of gives you an idea of the industrial side of things. That's probably going to be contracting again, but less than June. And JOLTS layoff data, which is going to be lower in July than the prior year over year. But really, Friday jobs numbers, you really can't get more important than that.
Okay, Katia, great to talk to you. Thanks very much for your analysis. That's our economics reporter, Katia Dmitrieva. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now to Botswana next, where the rise of lab-grown diamonds is robbing the country of revenue from an industry that's made it one of the richest countries in sub-Saharan Africa. Our reporter Matthew Hill has been writing about this and joins us now. Matthew, how has diamond mining transformed Botswana?
Since independence from the UK in 1966, Botswana has really used diamonds to develop its country, and it's been held up as a real success story of an African nation that has used its natural resource wealth to develop its country, educate its people, build infrastructure.
So what's changed then as we've seen a greater use or kind of interest in lab-grown diamonds from consumers as well? This transformation, how has that played out in Botswana?
So for decades, the country's benefited from having this massive endowment of diamonds. It's been the world's biggest producer of the stones by value. And then after COVID, we saw a spike in prices in 2021 and demand where everyone was basically buying everything, including diamonds. But after that, there was a slowdown. There was a slump in demand from countries like China, which caused prices to fall, and some cutbacks from producers like Botswana. And then the real challenge came along, which was, as you say, lab-grown diamonds, where there was a big ramp-up in production of these stones. They started coming to the market at increasingly cheap prices. One diamond mining company said this year that they've basically been in free fall. So you've seen this phenomenon in the US and China where young buyers, especially Gen Z buyers, are turning to lab-grown diamonds for engagement rings, which can cost 1/5 of the price of a natural diamond. And I mean, you're just talking about the record gold prices. If you're a young person buying an engagement ring and you are facing significantly higher price for the gold that diamond is set in, that's perhaps even more of an incentive to go for something that costs far cheaper.
Yeah, yes, absolutely. That seems to be, the rationale of some buyers at least. But then what does it mean overall for Botswana? The population of just about 2.5 million people. This, as you've reported, means huge issues for government finances, for companies there. How is the government responding?
Exactly. It is a really, really difficult situation that they find themselves in. For a bit of context, diamonds account for about 80% of Botswana's exports, about 1/3 of government revenues. And in terms of the economy, they make up for about 25% of the total economy. When you take a big chunk of that revenue away, that introduces a crisis. The government is forecast to run up a budget deficit of about 11% this year. That's the highest in Africa. And if you take it in the context of Botswana being a shining example, generally speaking, of how to manage resource wealth well, that's quite a shocking statistic. The government's debt has nearly doubled in the past 3 years to the IMF sees it reaching 43% of GDP this year, which is actually beyond what the fiscal limits allow. So that also just shows how stark the crisis is. The government's being forced to cut spending. They face medical stocks running low, and the construction companies that rely on government tenders are laying off a lot of their workers too.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.